You already know it's Rob here, the Ignorant Entrepreneur, here to talk about some Robinhood. It's hard to go an hour without seeing another headline related to Robinhood cross the screen, as the investing world has been captivated by the multi-crew of investors that call the Reddit stock and option trading community r/Wall Street Bets home. But one has to ask, are Robinhood traders successful? Robinhood investors do have a reputation as risk takers, and the data proves this. On average, Robinhood investors take significantly more risk than your average Russell 1000 stock, a risk appetite that seems to have grown since the COVID-19 crisis began. And with such a crazy bull market, who could blame them? But has this risk appetite translated into worse future returns for their holdings? This was answered by looking at the future 1-month returns at each point in time to see if the increased risk-taking was resulting in worse returns for Robinhood investors. For example, if we looked at the 54 securities that had over 10,000 Robinhood holders on March 8, 2018, we see they had a median return from March 5, 2018 to June 3, 2018 of 4.73% versus the Russell 1000 median return of 2.97%. Shockingly, there are very few times that Robinhood investors on average perform materially worse than the market, and they appear to have done better than the market during the COVID-19 crisis. Robinhood investors have been buying riskier stocks, but have also been performing slightly better than the market. As for our second question, is Robinhood responsible for moving the market? Now, you see this all throughout the news, people speculating on this crazy bull market we've been having. This query can be answered easily by tracking the minimum value of accounts over time. As each Robinhood holder of a specific stock must hold at least one share of that stock, we can analyze the minimum dollar value of Robinhood accounts. For example, if Tesla has 300,000 holders, we know that the minimum number of shares held is going to be 300,000, one per holder. In reality, this number is much higher on a notional level. Since it isn't clear if this data includes options or not, and one cannot be hard-pressed to believe that in companies with lower share prices, such as Hertz or Ford, the average Robinhood holder will have many more than one share. According to that simple methodology, the minimum dollar of Robinhood holdings has jumped by 396% since the COVID low, which makes it seem pretty obvious that Robinhood investors are having a major impact on the market. What does this mean for other investors? Well, retail investing has come into its own during the pandemic. With more people social distancing in their homes, the market has seen an unprecedented uptick in day trading from everyday investors. Markets are now faced with a less disciplined, albeit riskier faction of investors ready to take immediate action on the household names they are familiar with. This leaves more sophisticated investors with the added responsibility of following the swings resulting from Robinhooders investing in well-known companies. Luckily, there seems to be a sense of normalcy for lesser-known and high-growth potential companies that are not experiencing the same phenomena. All that we know for sure is that Robinhood investors are doing slightly better than average, and in much riskier stocks than average. It does not look like the rapid growth in Robinhood accounts and the minimum dollar value invested is decreasing. I would personally expect these trends of Robinhood investors outperforming the markets and the number of Robinhood investors increasing to continue until the market goes risk off. Until then, it might not make sense to bet against Robinhood. What do you guys think, man? I am a fan of Robinhood's platform, and if you are too, looks like we're moving the market. Don't forget to like and subscribe, comment below, and I'll see you in the next video. Peace.